He's one of the Fed's most vocal opponents, even calling for an end to the central bank, and now he's blaming the Fed for the recent market swings. Joining me now, the man himself, former Texas congressman and host of the Liberty Report, Dr. Ron Paul joins us now. Thank you so much for joining us. Let's get right into it. I mean, can you believe that Janet Yellen said that accommodative monetary policy puts people back to work and reduces income inequality?
She has it upside down. The way I look at it, when I look at Federal Reserve policy and I look at all the recessions and depressions and the problems we've had in the bubbles, I would say they're the culprit. They don't solve it. But, you know, over the years, they've gotten away with that fib because they've always said that either the Congress or free enterprise got the economy into trouble and caused unemployment, but the Fed always came to the rescue. Well, that attitude has changed ever since this last gigantic recession set in. They're starting to realize, and I think the bailouts helped us in getting that information out. There's a lot of questions being asked about the Federal Reserve. I think it's very healthy because they do not rescue a bad economy, and when they try to, they just prolong it. And just look at, you know, what the central bank did in Japan and look at what they're doing here in this country. And, you know, things aren't really that much better in spite of their so-called favorable statistics. We still have a lot of problems.
We have a lot of problems. And when you look at what's happened, I mean, I think almost everyone would agree that the loose monetary policy has caused people to put more money into the market. I mean, we've seen a drive up in equities. That has created more of a divide between rich and poor. I mean, the real beneficiary has been equities. No?
Yeah. Yeah, and this is true. And, of course, the statement that there is no inflation by conventional wisdom of Keynesians, yes, because they only measure the CPI, which sometimes is fudge. Now, an Austrian economist measures it by the increase of money and credit, and that you can't control where it goes. So if you have a NASDAQ bubble or a housing bubble or a bond bubble, or you have student debt skyrocketing, there's still a lot of malinvestment. And that to us is inflation and distortion of the economy, and they say, well, we're still working on inflation. To me, it's so bizarre that the deliberate purpose, the biggest frustration for the Federal Reserve right now is we can't destroy the value of the money in purchasing power, at least by 2%. Quite frankly, it's being devalued a lot faster than that. That's why the middle class is being wiped out.
The middle class is being wiped out, and you also think that this is causing a lot of the volatility. I mean, I know it's caused the run-up. Why do you think it's causing the volatility? Because I'm not sure I agree with you on that one.
Well, I think the volatility is just an expression they don't know what to anticipate. There's no market forces, and your calculation is at the whims of this secret group of people who are going to make big decisions. And just think of what it would have been like if they would have raised the interest rate today, surprisingly, by 0.5%.
Yeah.
You know, in theory, that shouldn't hurt much, but it could affect because of this inability to anticipate and understand what's going on. That could have wiped out trillions of dollars of wealth in a minute. So that's why people will be very, very worried about what's happening.